For centuries, money has shaped our lives. We've traded goods, used coins, and now rely on banks and credit cards. But what if there was a different way? Enter cryptocurrency, a digital money system that cuts out the middleman. It's a revolutionary idea, but how does it actually work? Is it magic internet money? Is it the future of finance? Buckle up, because in this video, we're going to crack open the code and explore the world of cryptocurrency. We'll delve into the technology behind it, how it's used, and even the potential risks. So whether you're a curious beginner or a seasoned investor, this video is for you. This video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Investing involves risks, including the potential loss of principal. The creator is not responsible for any losses incurred. Let's start with the money we know. Most of us use fiat currency, which is basically paper money or coins issued by governments. The value of this currency is determined by the government and central banks, and they control the printing and circulation. But what if you wanted a system that wasn't controlled by a single entity? That's the core idea behind cryptocurrency. Hold on, isn't digital money already a thing? We have online payments and apps like credit cards. That's true, but there's a key difference. Digital payments still rely on banks and traditional financial institutions to process transactions. Cryptocurrency, on the other hand, operates on a completely different system. It's like a digital record of ownership, independent of banks. Imagine a giant public record book that keeps track of every single cryptocurrency transaction. This book is called a ledger, and it's accessible to everyone on the network. Every time someone sends or receives cryptocurrency, the transaction gets recorded in this ledger. This transparency is a key feature of cryptocurrency and helps ensure trust and security. But how do we know this record is accurate and secure? That's where things get interesting. The magic behind cryptocurrency lies in a technology called blockchain. Imagine a giant chain made up of individual blocks. Each block stores information about cryptocurrency transactions. Here's the twist. Unlike a traditional ledger kept in one place, this blockchain is distributed. Copies of this chain are stored on computers all over the world, creating a peer-to-peer network. This means there's no single point of failure, and the information is incredibly secure. So, how does a transaction actually work? Let's say you want to send some cryptocurrency to a friend. The transaction details, like the sender, receiver, and amount, are bundled together and added to a new block on the chain. Then, computers on the network, called miners, work together to verify the transaction. Think of them as auditors checking the legitimacy of the transaction. But how can we be sure these transactions are genuine? This is where cryptography comes in. Miners use complex mathematical puzzles to validate transactions. Solving these puzzles takes computing power, and that's where the security lies. Once a transaction is verified, it gets a unique digital fingerprint called a hash. This hash is linked to the previous block's hash, creating a chain where tampering with one block would alter all the following ones. It's like a tamper-proof record. Trying to alter a single transaction would require changing all the subsequent blocks on the chain, which is nearly impossible due to the vast network of computers verifying the information. This combination of distributed ledger technology, cryptography, and hashing functions creates a highly secure and transparent system for recording cryptocurrency transactions. Pretty cool, right? We talked about how miners verify transactions, but how does it work? This process is called mining. Miners use powerful computers to solve complex mathematical puzzles. These puzzles are like digital locks that secure the network. The first miner to solve the puzzle gets to add the new block containing verified transactions to the blockchain. By solving these puzzles, miners essentially play a crucial role in maintaining the security and integrity of the blockchain network. But why would anyone spend all this computing power solving puzzles? Well, there's a reward. Miners who successfully add a block to the chain are rewarded with new cryptocurrency. For some cryptocurrencies, there's a limited supply built into the system. This means there's a maximum number of coins that will ever be created. This concept of limited supply can actually influence the value of the cryptocurrency. Similar to rare collectibles, scarcity can drive up the price. It's important to note that limited supply doesn't guarantee value. The value of cryptocurrency is still determined by factors like market demand and utility. Not all cryptocurrencies have a limited supply. Some are designed to continuously generate new coins. The concept of mining and limited supply adds another layer of complexity to the world of cryptocurrency. Alright, so you understand the basics and how new currency is created, but how do you actually hold on to your cryptocurrency? Cryptocurrency isn't stored in a physical wallet like cash. Instead, you use a digital wallet. There are different types of wallets, some software-based like apps on your phone, while others are hardware wallets that resemble USB drives. Security is paramount when choosing a wallet, so make sure to research reputable options. If you're interested in buying cryptocurrency, you'll need to use a cryptocurrency exchange. These platforms act like marketplaces where you can buy and sell crypto with others or directly from the exchange. Many exchanges allow you to use traditional payment methods like credit cards to purchase cryptocurrency. You might be able to use your cryptocurrency for online purchases or at certain stores. However, the options are still limited compared to traditional payment methods. Before we dive headfirst into the crypto world, let's address the potential pitfalls. Cryptocurrencies are exciting, but there's a dark side to consider. Unfortunately, cryptocurrency attracts scammers. Be on the lookout for pump-and-dump schemes, fake ICOs, initial coin offerings, and phishing attacks targeting crypto users. Always do your research before investing in any project. The cryptocurrency market is known for its extreme volatility. Prices can swing wildly in a short period, leading to significant losses. Remember, cryptocurrency is a high-risk investment. Cryptocurrency's anonymity can also be a double-edged sword. While it offers privacy benefits, it can also be used for illegal activities like money laundering and financing terrorism. Regulations are evolving to address these issues. So, to wrap things up, we've explored the world of cryptocurrency. We learned that it's a digital form of money that operates on a decentralized ledger system called blockchain. Transactions are secured through cryptography and verified by miners who are rewarded with new currency. Cryptocurrency offers exciting possibilities, but it's important to remember the risks involved. The market is volatile, scams exist, and regulations are still catching up. Before you jump in, do your own research, understand the technology, and only invest what you can afford to lose. Thanks for joining us on this journey into the world of cryptocurrency. If you enjoyed this video, be sure to like and subscribe for more content. We'll continue to explore the ever-evolving world of finance and technology.